We're going to have a great time with business structures. This is a nice little introduction for all the entity types we're going to need to know for the exam. Some of these examples are going to be C Corps, S Corps, partnerships, and they will have their own dedicated lessons or multiple of them, because why just have one lesson when we could have so much more fun with 3 lessons? Those lessons are going to focus more on detailed calculation-based questions, items on their respective tax forms, and even many points we will cover in this lesson. The point here is going to be as a concept to introduce you to these entity types before seeing them more in depth, as well as preparing you for particular types of questions. Now, what are some types of questions that you could see specifically based on this lesson as compared to those other separate lessons on C Corps, S Corps, and partnerships? I don't want you to think this is redundant in any way. Yes, there will be overlap on the important points because, well, why not? Let's get practice on all of those important points. But specifically based on this lesson, you might have to describe an entity structure and choose the entity type that's being discussed, or rather the question prompt would just describe the entity structure. So if it says, oh, it's subject to double taxation and there are distributions that are called dividends, that's a super basic example, but you would say that's a C Corp. Another type of question might require you to choose the proper entity type for individuals looking to start a business based on their needs. That's a common sim as well, where you'll see a bunch of different prompts. Oh, we've got 2 individuals that want to start a business. They want to protect themselves from any legal liability. They want to have the most tax advantageous structure. They have higher incomes. They have lower incomes. All these different criteria that you're going to have to take into account when determining or recommending to these theoretical individuals what type of entity they should have. Is it one person? Is it multiple people? Are there 1,000 people? Because that would exclude S Corps. A lot of different factors to take into account when you're running through these. Going to be quite the important lesson. Going to be a pretty hefty lesson as well. But all of this is important. This is going to help you to succeed on the exam. Again, think of this as a lesson that's going to help you answer a lot of questions specific to it, as well as introduce you to these entities themselves, which we will then see in even more depth in later lessons. Now, by comparing all these entity types here, our goal is for you to be able to distinguish between even the smallest important differences of each business structure. How are distributions from all these entity types treated? How are contributions? When are the gains and losses realized, recognized? What's the basis in assets distributed? A lot of different factors to take into account. Nothing to be too overwhelming. We're going to take it one step at a time together. Here is a nice little comparison chart of all of our different entity types. Now, you may see, for example, that the LLC is not going to have its own individual lesson. Sole proprietorship doesn't have its own lesson, but this is kind of within the individual income tax lessons. So that's covered there on Schedule C. What C Corp, S Corp, partnership, these will have their own lesson or lessons, as we will see. Now, a C Corp, this is the only entity type that can go public, meaning the only one that can list itself on the stock exchange, New York Stock Exchange, or I'm not going to get into other stock exchanges. Is there limited liability for the owners? Well, yeah. And let's think about this and use examples from your own real life. If you buy a share of Apple and Apple goes and commits massive fraud, are you liable for it? No, not at all. Who's liable? That's a lot of legal implications, but maybe it's the CEO who committed fraud. But we'll talk about that in our business law lessons as well. Now, is it eligible for the QBI deduction? No, and we'll talk about that within the individual income tax lessons as well, because you'll see that generally flow-through entities are eligible for this deduction. Not that I'm going to really get into what it is here. Just something to memorize and then know once you do see it in lessons. This is going to be something dealing for individuals. And if income is passed through from an entity to an individual, then yes, you will be eligible for that QBI deduction at the individual level. Now, taxation of owners for your C Corp, that taxation will exist on dividends. And is there taxation at the entity level? Yes, on earnings. So we have double taxation. The company earns money, it gets taxed on that, and then the money post-tax gets distributed to the shareholders, who then get taxed on it again. So that is double taxation. That's not ideal. But why would you want a C Corp? Well, because it can go public, raise a lot of money. There is a lot of limited liability for the owners. And I want you to memorize these forms for sure. I mean, there's a lot of tax forms, lots you won't have to memorize, but I'll tell you which ones to memorize. Definitely memorize that you do the Form 1120 for a C Corp. And how many owners can you have? Well, you can have 1 or more owners. Now, an LLC, and we'll dive into the history and the importance of these types of entities as we go through the lesson. Not that you'll have to answer questions on the history of them, but I think it really lends itself for you to understand why they exist. Like, well, why does an LLC exist? Why does a S Corp exist? What are the differences? And it's just, maybe 1 or 2 slides kind of talking about the why, and it really helps to understand the implications of it, as well as why these entities have the attributes that they do. Now, an LLC, limited liability company, this can be taxed as either a C Corp or a partnership. That's something we'll see. And a lot of times in questions, you'll say, oh, even LLC, and they elected to be taxed as a partnership or as a C Corp. Now, you might be saying, generally speaking, a C Corp, yeah, that has a lot more negative implications tax-wise. So yeah, it would make more sense to be taxed as a partnership, but there are reasons for why you'd be taxed as a C Corp. And we'll talk about a lot of different situations as we move along. Is there limited liability for the owners? Well, it's in the name, limited liability company. So I would say for sure there's going to be limited liability for the owners. Generally speaking, meaning if that entity goes and conducting business, and maybe it's a pharmaceutical company, and they pass some sort of drug and that drug harms people, the individual owners are not going to be at liability's door there. It's going to be the entity that is liable for paying out restitution and dealing with that fallout. Maybe, yes, there will be individuals at fault as well, but we'll talk about that again in business law. QBI deduction, any sort of pass-through entity, which these are all pass-through entities except for C Corps. Yes, we will be eligible for that. Well, the individuals at the individual level will be eligible for that. Taxation of owners and the taxation of the entity, this will depend on the LLC classification. If you classify it as taxed as a C Corp, then we'll follow the rules for a C Corp. If we are a partnership, then we'll follow the partnership rules. What about forms here? Well, we are going to use the Form 1120 if we choose to be taxed as a C Corp, or the 1065 if we choose to be taxed as a partnership. Nothing too wild there. Again, memorize those forms. How many owners are we going to have? We are going to have one or more owners. Now, a couple points, and we'll dive into this eventually on various slides. A single member LLC is a disregarded entity. And what is a disregarded entity? That is an entity that for tax purposes, the IRS disregards. They don't view it as an entity because it doesn't really matter. So if you have one owner of an LLC, everything there is going to flow through that one person. So if I have Nick's Business LLC, they're not going to view, the IRS is not going to view that as really as an entity. They're going to view me as an entity, as a tax-paying entity. But for tax purposes, my Nick's Business LLC is a disregarded entity. That's just a term. And if you see disregarded entity, that's what that means. The IRS doesn't really view that as a tax-paying entity. Now, if it should pay taxes, for sure they will count it. But as we will see, if it's taxed as a partnership and everything flows through to me, I'm the taxpayer, not the entity. I just have that entity for legal protections overall. Sole proprietorships, is there limited liability? Not at all, right? So why would you create an entity? A lot of times it's for legal purposes. Is there tax benefits for a lot of this? Not really, actually, particularly. A lot of times when starting a business, people think, oh, I should create an LLC or a corporation or something for tax benefits. But as we will see, especially throughout the individual income tax, Schedule C, doing your own sole proprietorship, there's actually not a lot of tax benefits. Again, relatively speaking, if you have a smaller company, a one-man business, something like that, for creating different, and this is not tax advice, just a note there. I'm not giving you any tax advice on what you should do. If you're thinking of starting a company, hey, if you want to talk about that some other time, feel free to reach out, and I will probably be there with a nice tax lawyer to make sure I don't say anything stupid so I don't get sued by you. This is going to be if I'm doing a CPA tutoring business, if I have a small bakery, right? Something like that, where I probably am not going to fall liable to lawsuits. But if I'm doing maybe a manufacturing operation, will I create an entity? Probably, because that sounds like something that might result in some harm, some damages, right? If I'm dealing with heavy machinery, probably create an entity so that limits my liability. Now, are we eligible for this deduction? Yep, as pass-through income. For now, we'll just memorize that, but we will dive into the QBI deduction, what that is, in the individual income tax lessons. Taxation is going to happen on the Schedule C, which is part of the 1040. It's one of the schedules attached to the 1040. The entity, well, there's no entity to get taxed. This is not a legal entity, right? The sole proprietorship, this is not a legal entity. This is just what you call it when you have a business that you report on your own individual income tax return. And there can only be one owner because you are the business. It is tied to you. You don't even have a name. There's nothing like that. So it's just you. You are conducting business type activities and putting them on your tax return. Now, the S-Corp, how this works, you create a C Corp, and whether it's that day or a week later, a year later, I mean, it can be at any point. We'll talk about the specifics of that in our S-Corp lessons, but you elect to become an S-Corp. So just to reiterate that again, how does it work? you form a C Corp, you file the paperwork to become a C Corp, and then you elect to become an S Corp. It's a special elected status of a C Corp. So that distinction will become important later on. So just overall, for you to understand, you are a C Corp and you elect to become a special type of corporation. Is there limited liability for the owners? Yeah, again, it's kind of like a hybrid between a C Corp and a partnership, but you could also kind of say that for an LLC. And that's why we'll talk about the differences between these types of entities. Are you eligible for the QBI deduction? Well, just like all these other pass-through entities, you totally are. It will flow through to you as an individual. For the owners, they are taxed on earnings through the K1. We got some slight exceptions for distributions. There will be a lot of going into that in detail on the specific lessons as well. The entity is generally not going to get taxed. However, there will be some exceptions. When you elect to become an S Corp, if you have a lot of previous activity from being a C Corp before, then yeah, you may be taxed on that because the IRS doesn't want you becoming an S Corp just to avoid taxes that you incurred when you were a C Corp. That's something we'll see and dive into as well. How many owners? 1 to 100. Why is that? Well, again, we will dive into that, but just memorize that you can have only at maximum 100 owners if you're an S Corp. S Corps are generally speaking for smaller businesses, smaller entities, more family-owned businesses likely. That is kind of the history and the why as to why we have at max 100 owners. And then lastly, partnership. This has limited liability for the owners. Now, only for limited partners. We'll also talk about the differences between limited partners and general partners. There are massive distinctions there. Is this an entity that's eligible for the QBI deduction? Well, the entity is not eligible, but the partners are eligible as the income passes through the partnership to the partners. The owners will be taxed on the earnings. However, the partnership will not pay any taxes. And we will complete Form 1065 here. I think I forgot to mention 1120S for the S Corp. Memorize the tax form names. And then partnerships need to have 2 people. You can't have a 1-person partnership, 2 or more individuals. All right, what a good slide. Make sure you're starting to get familiar with these, memorizing these key attributes as we continue on.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.